Good morning, good afternoon, good night, wherever you're tuned in from. Welcome to the BitLab Academy daily live stream, 10 a.m. Eastern Standard Time, Monday through Friday. Welcome to the show. My name is Kelly Kellam. Thank you for being here. Thank you for being part of the community. If this is your first time, make sure you're hitting that like bell. Make sure you're hitting that subscribe, getting involved with our community, and dinging that bell. We got about 35% of the people that are in the community here that have dinged that bell. You got to ding that bell so you get notified when we go live, because we will be adding more streams, both pre-records and live streams and interviews. So make sure you're not only subscribing, but dinging that bell so you can get notified. In chat, how are you feeling? Are you bullish? Are you bearish? Get involved in that poll. Let me know what you're feeling about this bullish pump that's happening right now. We got a lot of stuff to go over today. First, before we dive into that, make sure you're coming over here and you're basically retweeting these posts. I'm going to do every Friday, I'm going to do a random day picker, Monday, Tuesday, Wednesday, Thursday, Friday. And then from that random day picker, whichever day it picks, then we will do a random name picker of all of you who retweet these posts. Helps get the word out about not only the BitLab community, but also helps people know a spot that they can come and learn about how to navigate these markets, how to not only have TA told to them, but the strategies and concepts and all the ins and outs of what the heck is going on. So come over here to the @Academy BitLab Twitter page and retweet this. You are basically going to be entered for a chance to win, either sometimes it's a lifetime membership to the indicators, sometimes it's lifetime membership to the courses, sometimes it's a 3-month. But we got a lot of stuff going on here, and a lot of stuff we're going to be going through today. Just looking here, we got a bunch of stuff we're going to be covering about what's going on in the markets, and we're going to be breaking this down. So make sure, if you haven't yet, that you check out bitlabacademy.com. This is the old site. As you can see, this is a new site. It's still in this. We're getting all the new courses integrated: psychology of trading, trading fundamentals, trading strategies, candles, candle patterns. There's so much. There's Bitcoin 101, blockchain 101. So much is coming to BitLab Academy. So with that being said, I want to shout out to everybody that's here, especially all you that show up early. Thank you for being a part of the community. And shout out to all of the mods that we have in here. Alex Green gets up. He's in the UK, but I'm getting up early so he and I can work, one-on-one together, along with the rest of our team, to get all the things built out so that we can bring all these updates to you all. It's been just such a gargantuan task. So I'm happy to have Alex on the team helping bring that forward. Also, shout out to Alexandra G. Who else we got? Crypto Infinity, Crypto JMP, Matt Lane. What's up? One of our recent winners. I think he got the lifetime membership for the indicators. Unforgettable Name also is basically lending some of his time and energy and expertise, helping contribute to some of these updates. And there's so much content that goes with all this to tie this all together. So Karen Swigart Harris, another recent winner. We got a lot of people in here, so shout out to everybody in the chat. Also, I think I saw Justin Eubanks was the first person to be on the stream today. We also got my dad in the chat. How you doing, Daddy-O? Mellow Fellow, Elliot Locke, Granny's Garden, Mark S. I think that's enough. You all are the early ones, so shout out to you. Let's talk about what's going on today. Market's pumping. Does this mean that we're going to the moon? Let me know in that poll that we have here in chat. We've got some signs that are showing that it wasn't just a pump that came out of nowhere. Some of these things were set up. And so the whole strategy that I'm really wanting to impart on all of you that are here in the BitLab community is you have to be able to, 1, be patient, but 2, have a plan, have a strategy. And if you don't have any of those things yet, that's okay. We all start somewhere. None of us were born walking. We had to learn to walk, right? So let's patiently give ourselves the opportunity to come to streams like this, and also to other streams like Frankie Candles or Investor Bros or BitBoy Crypto for news or Around the Blockchain. There's Debate Crypto, Tom Crown. There's so many opportunities for you that you can learn and basically build your knowledge base and understanding and different strategies. And so you can build the strategy that works best for you, for your risk tolerance, for the type of risk exposure you want to the market, for the timeline and time horizon that you have when you are engaging with this market. So with all that being said, again, Welcome to the show. My name is Kelly Kellam. That's where you can find me, right there at Kelly Kellam. There are a lot of fake accounts out there. Make sure you are following the correct one. And for safety's sake, you can come over here and you can follow me right here. This is my page, right about 20,300, 358. If you're seeing something that has, 1,000 followers or 15,000, that's not me. I'm not Kelly _Kellam. I'm not Kelly Kellam. It's Kelly Kellam. So with that being said, what the heck is going on today, man? These markets. I woke up today. We look at all this basically just green. This is on the 1 hour chart. Green. The graph green. Algorand starting to get a push up. This is on the 1 day. Let's go to a similar time frame so we can see what green. Cardano green. We can also see over here AVAX looking like it's still within a channel, but had some green sort of push to the upside. Gala broke out of a falling wedge here, which is a bullish structure. I don't want to hand you burritos. I don't want to hand you pizza. I want to teach you how to make those burritos. I want to teach you how to make that pizza. I want to teach you how you can go and gather that water for yourself. So I will be breaking down a lot of technical analysis throughout these streams, but I also like to pause and throw the rope back to beginners, because this stream is all about bridging that gap from beginner to pro. Regardless of where you're at on your journey, we have content for you. We have the alpha for you to learn the basics and alpha for you to master the pro strategy. So with that being said, let's sort of dive in here. Let's just take a little look at the markets. Man, we got market cap right now of the total crypto market cap, which is all the crypto out there, Bitcoin, Ethereum, all the different altcoins, at least I should say, the ones that are accounted for here on CoinGecko. And we can even see if we come over here, CoinMarketCap. If we go to CoinMarketCap, we've got 1.185 total market cap for all crypto. On CoinGecko, we have 1.230. This is just another one of those things. Just like when we're doing technical analysis on our charts, we want to make sure that we're gathering data from a variety of different places, because it's always going to be slightly different between different indicators, between different data sources. And I just wanted to point that out. But what we're seeing here with CoinGecko, we're seeing, if we just go to the 7 day, I don't even know what Caspa is, but that's up 87%, Flare up 34%, Mask almost 27%, XRP 17% pumping on all this hope about this SEC case that's been years in the making, and this bullish pressure that's just been accumulating the entire time. This sort of SEC questionable down pressure that's been on XRP. We also got Rocket Pool up, Litecoin 10%. We got a lot of stuff. Let's see if there's any losers. We got Optimism down 15%. Of course, they had a huge push up following that news announcement of their partnership with Coinbase. So it makes sense that after that massive push up, while everything else was a little bit flat, people are taking some profits and reallocating that to other assets. Synthetics down 13%, Toncoin down 12%, Stacks down. A lot of these coins were coins that were pumping while other stuff wasn't. So as you could see, liquidity is money in an asset space. So if you have, let's say $100 in your wallet, you have $100 worth of liquidity in your wallet. So we're seeing liquidity move throughout the space. So what we're going to do is we're going to look at some charts. We're going to see not just individual assets like this. We're going to go ahead and come over here and look at market caps of, basically the Bitcoin dominance, the total market cap of all the altcoins, the USDT dominance. Look at this. It's starting to fall while the prices of crypto are going up. And we've talked about that a lot on this channel. We'll go into that a bit more. We're seeing the CME futures. This is the more institutional side of Bitcoin, the institutional traders. We're seeing this push up as well. Now we'll come over here to the Dow Jones and the US dollar index and S&P 500, NASDAQ. We're seeing still a little bit of a bullish push, but we also have these bullish pushes within. Look at this. Within a bearish structure, we have essentially a rising. We can do Option T on Mac or Alt T on PC. Gives you your trend line. We can see this is a rising wedge, which is inherently a bearish structure. So we always want to take into account when we're getting a movement to the upside or downside. Just because we're having look at this, a little bit of a bullish push up, does this mean, Dow Jones pressure is off, risk is back on, people are coming back in the market? Maybe not necessarily. So we're going to be looking at all this, breaking down these concepts and seeing what targets we can be looking at as we are trying to navigate this space profitably. We're not doing this as a game just for fun, not just entering trades to enter trades, but we want to look at all these things. We want to build that wide array of ingredients that gives us the best sort of lens on the market and also individual assets and how they're interacting with each other so that we can be successful in how we navigate this space, but also be profitable over time, especially when we look at, let me see if I could pull this up, especially when we look at things like this. We could see, we talk about the Bitcoin halving regularly on this channel. The halving, for those that don't know, remember we got to throw that rope back to the beginners. The halving is the miner rewards, the miners that are basically securing the network, those that are processing transactions. They compete on a cryptographic proof, and those, whichever one solves it fastest, basically, and all the other, all the transactions within that block, basically within that block of transactions, the ledger, the decentralized ledger of all transactions, they all agree on all the transactions, and then a miner solves a cryptographic proof, and then they get a reward for it. This is supply, new supply, technically inflation coming into the Bitcoin market. Now with the four-year cycle, this, which is essentially really every 210,000 blocks, is basically that the halving of rewards. So the rewards right now, I think, are 6.125 or 6.25, somewhere in that region. In about April to May of next year, that reward for miners gets cut in half, meaning the amount of new supply that comes available into Bitcoin gets reduced by half. This is why, this is one of the reasons why, there, at least it's a heavily considered and regularly echoed sort of theory on the regularity of market cycles within Bitcoin and the crypto space, is this four-year cycle with Bitcoin, because it has to do with understanding the supply side of the market. It's a fixed, understood, programmed new supply that comes in the market that gets reduced on schedule over time. And so therefore we can see this is April 2013. We see this push up, breakdown, push up, breakdown, push up. And we can see on this four-year cycle, this is that early cycle. This is a 2021 cycle. This is a 2021 cycle, but let's take it back. This is a 2013 cycle all the way into 2016. Now this green line here is the 2016 into 2017 cycle top, blow off, breakdown. We had that long period of accumulation here, and then the floor fell out from under us and caught a lot of people off guard. We got that final capitulation. Capitulation meaning people gave up, they sold. So a big portion of the market sold here, shook out the rest of the weak hands, the retail traders that just don't have the conviction for long term, or they're just basically short-term time frame traders. And we see the market, the market value on exchange just completely fell through from about 6,000 down to about 3,500. This marked the bull market. This marked the bottom of the bear market, where we had a period of accumulation, and then this push up into this accumulation stage. You see here, we can see this on all three of these different time frames of Bitcoin price action. And we can see with this purple line, this was at 64K top, the second push up to about 68, 69K. And then the breakdown. And then we have the FTX collapse right here, period of accumulation. And now we're entering based on time. We're looking at a sort of a time analysis of where we're at within a cycle. And this isn't going to be 100% accurate all the time, but this is one of the ingredients that we can utilize to understand where we're at and what might be taking place. We can see that we finally pushed based on time and how close we are pushing into the next halving in April or May of 2024, that we are entering into that period, that time of accumulation. Well, let's look at this back on the Bitcoin chart. So coming here, we're going to go to the 3-day chart. Wait, question is, we got 103 people in the room right now. We've got 53 likes. Hit that like button, hit that subscribe button, ding that bell. We've got a lot of stuff that we're going to be going over here. I want you all to let me know again right now. Did you get in position before this recent move? At what point did you get in position? Are you still waiting? Let me know here in the chat. If you're watching later, drop the comment down below. Let me know also right now what projects you are. I'll be doing some TA, some variety different altcoin TA at the end. Let me know in chat. Put 2 or 3. Put hashtag and then the ticker, hashtag ALGO, hashtag ADA. Let me know some of the coins you're interested in seeing some TA on, some levels. And I will try to get to those. Anybody that does that, anybody that also, I'm making more of an effort to read the chat. I got my mods in here messaging me on Discord as well. Any super chats, I will absolutely make a focus to, answer any of those questions specifically as well. So if you do super chat, Noah will be bringing those up. But now looking back here I got to turn off this heater on my legs. I'm on fire. So let's go ahead and mute these indicators. Let's mute these all these lines. What we're going to do here is we're going to type in halving, and we can see halving past dates. We can see similarly to this chart that we are looking at here, this is all the different cycles laid essentially on top of each other. But we can also look at it this way, where we're seeing past halvings push up into the halving, pull back, and then basically follow through after this on this entire space here about the first third of the time frame. We can even measure this here. Date range from the halving to the top. We've got about 375 days. We can do this again from the halving to the top. We've got, it looks like it's a little more extended, 501 days from the halving to the top. Now, the argument here is going to be, is it going to be the second top or the first top? Based on a lot of the metrics, a lot of people would argue this first top would be the true cycle top because of the inflation, the M2 supply, money being devalued. If you look at Bitcoin against the M2 money supply, this was actually the top, but we can do either. So this would be 348, very similar to this time frame here, or we can go to this second top here, which is 546. So we're roughly this period, this 30% up to about 25%, I should say 20% up to about 30% of the time frame here. Similarly, about 35 to 40%. We're getting a little bit slower as the ship gets bigger, as there's more liquidity within the space, within the crypto ecosystem. It's like having a Mazda RX-7 or a Ferrari. Very small, strong engine, very easy to navigate turns. Okay, bigger, you get a semi-truck. Takes a little more energy and a little more time to negotiate a turn. Then you think about a train. Think about how long it takes a train to start or stop with the tons and tons of basically metric weight that it is carrying, or a cruise ship versus a ski boat. The larger these crypto ecosystems get, the slower it will take. The longer period of time it will take, more energy, liquid energy of capital and market participants to move things, especially when we're seeing large explosive movements. Now, as we do have derivatives, meaning perpetual futures, basically when somebody, rather than trading on spot, which is if you're on Coinbase, you're trading on spot, meaning there's no leverage. You trade. If you buy, 1 Bitcoin or let's say 180 ADA Cardano, the price goes up. That's basically a spot 1x. You're not getting any multiples. There's a lot of people that trade on Bybit, BitGet, Phoenix, all these variety of derivatives exchanges, and they're taking margin. They're putting up $1,000 worth of capital, but they're doing it on 10x, and so they're getting 10x worth of value. Now that's also the value in gains, but that also is 10x the risk that they're taking on in losses if the trade moves against them. So that being said, and the reason I bring that up is when we're looking at this and we're talking about this potentially being a larger ship, although there's a lot more liquidity needed, some of this liquidity is paper liquidity or derivative liquidity, meaning that there's not, for instance, if we're seeing these moves that we're seeing right here that have these very fast moves to the upside, is this a lot of people just coming in and buying? just on the spot market with actual I don't want to say actual money, but with one-to-one value that's driving this up. Not necessarily. We have to take that into consideration. It's where we can come over here to websites like CoinGlass, which is a free website. We can come over here to Liquidation, and we can scroll down, and we can see right here, the bars to the downside are short liquidations, meaning people that were betting short on leverage, on whether it's 2x, 3x, 5x, 50x. There's all kinds of multiples people could take. There's different risk exposure people take. And I want to really encourage you all to, especially where we're at in the market right now, to, unless you're an experienced trader, not just dive in and do leverage trading because you're going to be rich tomorrow. I can tell you right now, firsthand experience, I got very good at spot trading, meaning not taking on, not incurring more risk. And I thought, man, I'm such a good spot trader. I'm going to leverage trade. And I lost about $70,000 in the matter of about 2 days. This is luckily years ago. I've rebuilt since then. But I learned that was my crypto tuition. And I want all of you that are here, I don't want you to have those same sort of issues and stupid mistakes that I made. You all are smarter than me. You're here learning, growing into healthy strategies and healthy strategies and healthy analysis and healthy planning so that you don't incur unnecessary risk and expose your capital to unnecessary risk because you earned it, whether you earned it trading or at a veterinary clinic or cleaning sidewalks, however you earned your capital, even if it was inheritance, it is inherently, I mean, capital is time. Money and currency is an exchange of time and effort. And so if you lose capital, if you lose assets to unnecessary risk, you are inherently burning time value in your life. So I want to save you all from this. So going back to this idea of talking about liquidations and exchanges, we can see, you see when we're seeing this fast move up, this is this orange line is Bitcoin price. We can see that as this is moving up quickly, we're also seeing a lot. We see $87 million worth of short liquidations, $159 million worth of short liquidations, another 37 million, 127 million. So this is, a lot of this move is filled by short liquidations. Now, the short liquidations are essentially when people are betting, they're basically taking leveraged or derivatives or margined positions short, meaning that they're placing their trades expecting price to go down. And as price starts to go up, they are forced to cover that total amount of that short position. So if you have a $1,000 or let's say $100 position that you do 10x on, so you're doing $1,000 position. Now, even though you only had $100 worth of collateral in there, if the market is moving against your position, you have to cover that $1,000 worth of short buying long to close that short position. So there's a lot of different things at play here, not just liquidity coming into market, not just, I don't want to say honest market movement, but there are other factors other than people just coming in, buying and selling in the markets, because there are pressures that be within these derivative markets that make some moves more healthy than others. And by that nature, by understanding these things, we can understand if there is a lot of short pressure on the market tends to move in a direction that upsets the most people and takes the most liquidity that's freely available to them. So how is everybody feeling today? Nicholas Rito, damn good facts right there. Yes, sir. We are trying to break down things, not just, again, I don't want to just give people signals. I don't want to just do charts and show you exactly what's going on. I want to discuss the concepts and the true nature of the underpinnings and the inner workings of what's going on in the crypto markets, so that all of you can navigate these things healthily. Now, jumping back into the screen here, I want to go through a couple of things that we need to consider here. Now, it looks like, as I mentioned, we are in this accumulation stage. And if we look at this also on an on-chain metric. This is an on-chain metric I created that Looknode hosts, and Looknode has a lot of free on-chain charts. So come over here, check it out. Come to the market, Bitcoin, and the market valuation, cycle valuation. Come down to the Bitcoin trend fib. This Fibonacci fib opportunity zones. And what I want to point out here, if I'm going to turn off the take profit zone, I'm going to take off the extreme hype, and I'm going to take off generational buy. You can turn off all these. We can even turn off realized price, and let's turn off full control. So what I want you to notice here is a similarity that I feel like is brewing, that some people are expecting pre-halving. We are going to get this massive uptick like this, just boom, uptick. And then, you know, maybe up in terms of this market cycle, potentially up to, if we look at this, if we do a trend fib, or sorry, option F, if you're on PC, it's Alt F from the top all the way to the bottom. A golden pocket on this move is all the way up here in this $50,000 range, $48,000 to $50,000 range, which is also in line with this previous top right here. We can even do a line. Option J gives us a horizontal ray. Some people are expecting or hoping, you know, they're not trading full on just, you know, on the variety of data that we need. Let's double click on the chart. We can minimize those indicators on the bottom by double clicking on the chart. This is at 2018 into 2019 pump from all the way down $3,000 all the way up to nearly $14,000. Now, some people are hoping for this to trade this volatility. And to get this sort of move, we look at this, option F, to the bottom, this pushed up into that golden pocket zone. We see this? So some people are expecting, you can't just do historical analysis on one cycle and expect the exact same thing to play out, because market makers know that as well. And people are getting smarter within the space. There's more maturity coming into the space. There's a growth in long-term holders within the space. In fact, I think around 60% or so, over 60% of the market is long-term holders now, which is incredible. That lends a lot of strength to the market, but we can't expect, just because previous cycle, we had this huge liquidity push all the way up to this golden pocket of the previous cycle high to the cycle low. Similarly, cycle high, which is this fib, to the cycle low. Are we going to get this push up to $50,000? Well, look at everything that's going on in the global economy right now. Now, we could have this. Bitcoin, in my mind, is the answer to the failure, the systemic failure and Ponzi scheme that is the global banking system. But banks know that too. And we see a lot of FUD coming out right now. We see a lot of still, you know, it's entrenching sort of issues with inflation. We're seeing, you know, the bond yields and other economic factors and charts that are signaling that maybe this is not the smartest play, just to, you know, buy and hold on, expecting it's going to get to this level and come down. So what do? Well, we can, to do any sort of accurate historical analysis, meaning looking back in previous cycles on your asset and with other signals, we can look to see how things played out in, you know, other cycles also. So let's go from the top here, option F, from the top of this cycle to the bottom. Now we see here, we had, let's go ahead and zoom in here. I'm going to kind of come over here just like this. Okay. So now looking at this, when this capitulated down, this had a lot of work to do. We had this sideways price action. We did have a push up, but this push up, if we look at it like when we were looking at 2019, this push up would have been the one that got all the way to the golden pocket. But we see we got this push up and then a bit of a pullback. And look at this. It doesn't look that big, but if we look at this, this is about 25% pullback. We had a push up. We had two push up. I mean, if we even go from this wick all the way down to here, that's a 40%, 35% pullback. Here, another push up, pullback, and accumulation. This is what I'm getting at here. Now, when we look at the on-chain metrics, similarly, this is that same time period. We had that basically bottoming of the market cycle. sideways accumulation, that initial push up, these two push up, pull back, push up, pull back, but these are getting rejected at this bull floor band. So in this case, this would be like an accumulation ceiling band, would be a similar way. Maybe I'll add that tag to the chart. But we see we pushed up to this level and then had sideways accumulation that was riding on, if I do this, that was riding on, you see this capitulation or hope zone? This pushes up to this bull floor band, gets rejected, but is riding in this channel between these two levels, between the hope zone and the bull floor band, the purple band that we're seeing here. Similarly, if we zoom out, if we zoom in on this, where we're at now, we're pushing up. Come on, you can do it. We've pushed up beyond this capitulation, or that would be the capitulation is when we're coming down. And when we're going into the bull market, we see the hope zone. So we're entered this hope zone, but we're finding a little bit of we have resistance above us if we're relating this similarly to the 2015 cycle, which would be right about the $32,000 level. Now, we don't want to just look at this and say, this is word. So let's look to the cycle. Let's look to the charts and see what that looks like on technical analysis, because on-chain data just gives us one look, and then we can look to technical analysis to see how this sort of fleshes out. Is this in agreement with any levels on the chart? Where's the $32,000 level? $32,000 level is, look at this right here. I'm going to make this bold. Okay, we can see this $32,000 level would be right here at this previous price action high of this right before the capitulation happened. So this is saying between on-chain data and with technical analysis that we could still get a healthy move up to this region and get rejected here. And it's not the end of the world. Even this move here from where we're at right here up to here is another 12% move up to, actually it's a little more, up to 32,000 would be about 13% move. But this could be a healthy thing for Bitcoin if this were to come up and then get rejected and sort of test this region here, maybe even have a scary capitulation down, and then we have that move to the upside. The point being is we're having these very strong bullish pushes, which is very exciting. But we need to look to the combination of previous cycles, the last cycle and the cycle before that, in combination with what else is going on in the markets. Got a little bit of an itchy eye right now. Alrighty, so now let's look at this. Let's go through a little bit of the other things that we're seeing within the markets and see what is fueling this. And I'm so excited you're all here. I love seeing all these names in chat. We got 120 people, 94 likes, man. That's feeling good. If you all have not done it yet, come over here to the BitLab Academy Twitter page. Let's see, right here. Make sure you come over here, retweet this. I will be selecting at the end of the week between one of the days. We're not going to know which one. It's going to be random. But when you retweet these daily posts, you're basically entered to win either a great membership with the new Academy or the indicators. So come over here, retweet this. You're helping the ecosystem grow because you're helping people learn about how to navigate this space. And the more people navigate this space in a healthy way and make money, the better sort of talking points and representatives to crypto we are to our friends and families and to others, rather than people coming in, jumping into a leverage trade, losing everything they have, and then basically being another fear point and another hurdle for other people to want to come in. So by retweeting these, again, you're being entered to win, but you're also helping spread the news about what's going on. But let's go ahead and look at this. Caleb Franzen. He was one of our guests last week on the space, also super brilliant mind in the space. But he's talking about the disinflation is underway. Prices paid component with manufacturing index continued to fall. So the manufacturing prices are falling. This is one of those components when we're talking about what Jerome Powell is doing with monetary policy, with inflation. We're starting to see signals that are current that these things are falling, but this isn't going to be tomorrow. All of a sudden prices are cheaper at the store, at gas pumps, at basically as prices are passes on to retail consumer. These things take time, and one of the things that people are arguing right now with Jerome Powell and the Fed, and what the monetary policy decisions that are taking place is that they sort of move until they break something. Well, the problem is the 25 basis point hikes, coming down. They had 75 and then 50, now 25 basis point hikes. These things and the numbers that they're looking at, whether it's CPI, PCI, PCE, all these different data points, these things aren't immediately reflective of the policy that they just made. We're seeing banks being squeezed right now. We're seeing a flight of, at least a narrative flight of safety within banks, while the government is trying to say the banks are safe. But then the next day, Biden also comes out and says, the banking crisis is not yet over. Well, the funny thing about that is it tends to reason somehow that typically what the government is saying, the opposite is true for the time being. So who's to say there? So all we can do here as people that are investing and trading and trying to navigate markets, whether it's traditional assets or crypto, is use data points, not talking points. These talking points that the Fed are doing are not helpful to us. They're trying to shape a narrative rather than us. What we can do, you and I, all of us, we can use the data points just like they can, and we can draw an informed conclusion about how we want to navigate the markets based on these data points that are present. So we see that disinflation is underway. This is also going to be tied in with this narrative about likely recession coming in the coming months because these things are delayed things that happen within the market. We're seeing a lot of layoffs across a lot of different companies. Well, what do layoffs mean? Well, when we're starting to see institutions lay off, that means that now we're going to have an increased number of unemployment. And as we have an increased number of unemployment, that means there's less liquidity within the space. And it means that people that do have liquidity that's still stored within assets, within markets, and they don't have jobs, some of those positions need to be moved out of or liquidated or moved into cash so that those people can live, meaning that there could be a liquidity squeeze with the markets. But at the same time, this is why this is it's not easy to navigate markets, because at the same time all this is happening, we're also seeing a little bit of that narrative shift into Bitcoin being a safe haven. Now, is that going to be is this going to be a temporary or transitory thing at the moment as banks are failing and people are moving into Bitcoin, but then this risk on, risk off narrative is still in play? Well, we need to be in tune with what's happening in the markets every day so we can see the data as it's presenting, and we're seeing pressures build more bullishly or more bearishly, so that we can, especially if we're shorter term time horizon traders or investors, we need to be in position or out of position. For longer term time frame investors or traders, it's definitely a lot less stress. But even within that, I want to be on the larger moves within the market. Let's go ahead and look at this. On the larger moves within the market, I'd like to, buy somewhere in this region and sell somewhere in this region and buy somewhere in this region and sell somewhere in this region. But some people can do that. Some people can't do that. But when we learn and we have the data available and strategies available to us, we can foresee some of these moves and make informed decisions so that we can participate in one of the biggest wealth transfers in history, which is already underway, which is blockchain and Bitcoin and crypto. But we have to do it through being attuned with what's happening within the charts, the data that's presenting to us. And I don't mean, and I mean this, I don't mean seeing a green candle, so we buy. This is not when you don't buy because you see a green candle. This is counterintuitive to most retail traders. And this is why most retail traders lose money in the markets. You want to buy when there's an accumulation period and you see you're coming up, you found support on a larger term trend, and you see on for instance, we come back to the traditional indicators here. We can see on this, let's go ahead and hide all lines there. And we can see, I'm also going to hide the VPVR, and we can see, you see this right here, this price action going sideways while this stochastics is moving up, or you can see also price action moving down right here. So these bottoms are moving down, lower lows, and we can see that the MACD, we can see, let me undo that, come over here, mute that again. We can see that during this period, we see this momentum is increasing. See this momentum is increasing to the upside here as price is falling. We see that if we draw a line, this is going to turn all the lines on the chart back on, but we can see that the RSI pressures are coming up. The strength RSI relative strength index. This means price is falling as there's more strength coming into the market. This is all foreshadowing when we get this explosive move to the upside. Did it come out of nowhere? No. We can also see a bullish divergence right here on stochastics. Look at this steep increase in the stochastics right here, which is a faster moving strength and momentum indicator than the RSI. So I like to use these in tandem. Now also looking at these same things with the BitLab market intelligence, BitLab hidden volume, relative extrema. This is the whole BitLab trading stack. We can see here, we can even go on a more conservative. I have multiple settings that I have here stored in different templates. Look at this. We see this low pivot. Now we see another low pivot, and we see bullish divergence here. We see the floor. This is looking right here, significant movement. This is a combination. Looking here at the significant movement, which is this red and blue waves. When we get a blue wave, this is a combination, an aggregation of multiple different, not just one, but multiple different momentum indicators showing that this is very undervalued, meaning price is falling into a zone where the momentum indicators have reset and the value is undervalued, AKA oversold. So you might be looking for a signal here and looking at let's go here to a more aggressive setting. We can sort of zoom in here. Okay, let's go ahead and turn off the 4MA. Boom. So we can see here we had four bullish divergences. This is all part of the BitLab market intelligence. MACD bullish divergence, histogram bullish divergence, stochastics momentum bullish divergence. And we have this in tandem with having all of these down, the blue wave down here, showing us that sort of signal. Now, as this is moving sideways here, we see the relative extrema showing that these the extrema bars are sticking out to the downside, showing that any bearish movement is I don't want to say uncalled for, but it's out of character with the strength that is in the market at these levels. So this is on the 3-day. Now looking at the daily, this zone right here, we can see that there's bullish volume divergences coming in with the hidden volume right here. So we can utilize this. Similarly, we're looking historically now, but now what now what we can do is look at where we're at right now on the charts and see, we're getting this bullish push up. Is this going to continue? Well, we can see right here with the BitLab relative extrema. Look at this basically slingshot. When you think about the relative extrema, think about having a slingshot, and it's got the two little rubber band things that you kind of pull, right? And when you pull it back, the further you pull it back, the more pressure you have. Whichever way you're aiming it, that's the way whatever rock or acorn or whatever you have in your what do you call it? Your slingshot. Whatever you have in your slingshot, if you're pulling, this is basically like pulling it to the downside, which is aiming up. Look at this on the daily, this strong relative extrema to the downside. We have the neutral on the significant movement. We can see this right here, pulling up the charts. We can see this when this is gray, this is neutral. So nothing's overheated or underheated or overvalued, undervalued. This is neutral. But we're seeing that right here, this was moving down while volume was moving up on the hidden volume. We didn't get a divergence there, but we did see this was moving up, leading this move up. And we had the relative extrema pulling down to the downside, basically showing that even with this green candle, any bearish pressure here was sort of nullified because we're seeing there's the amount of strength that was coming in at these levels was showing that there was a lot of pressure to move to the upside. Now, we can also see with the relative extreme wave here, this crushed, this is essentially like a aggregate momentum wave, as well as a pressure, like a buy and sell pressure wave, and health of that buy. We see this wave cross after this has already moved up, but this is held on the upper side of zero here. Even with this move down, this held on the upper side. So this is showing that there's still inherently some bullishness at these levels. So as this pulled down, the question is, are we going to go lower? Well, we're still seeing a lot of bullish pressures at these levels. Now, coming back over to some of the things we want to go through today. Look at this, man. We're talking about the other economic context of what's going on within the markets and drawdown of U.S. commercial bank deposits. Look at this. This is the biggest drawdown since 2008. What happened in 2008? Well, the birth of Bitcoin happened out of 2008. That was the housing crisis and banking crisis of 2007 into 2008 that cascaded into basically 12 years of quantitative easing that just saw a huge, not only the birth of Bitcoin, but huge sort of surge in markets in the economy that was fueled by all that fake money printing from the Fed. Now we're seeing that, look at this huge drawdown. Are we setting up as bullish, as tight and quantitative tightening sort of posture that Jerome Powell has basically been proposing and sort of talking and trying to shape that narrative? We're getting into a situation that could be setting up for a lot more quantitative easing that could be coming in. When will it come in? We don't know. We're already starting to see that with about 400 billion coming into the market, but the US isn't the only global player. And this is what I want you all to remember. We got 207 people, 209 people watching right now, 117 likes. Get those likes up, hit that subscribe, ding that bell, join our community. We are growing fast, everybody. Look at this. We're up at 5,600 only in about a month and a half. So if you're watching over Hit Network, definitely come and check us out over here at some point, youtube.com/@BitLab Academy. If you're watching here, also come over here to the Hit Network. We got 24/7 stream, which is at Hit Network Official. Just shout out to everybody over there. Hit the like button, hit the subscribe button, ding the bell. But coming back over here to these metrics, got this drawdown. This is commercial bank deposits falling right now with all this fear of what's happening with SVB, with Silicon Valley Bank, that is SVB, First Republic, Deutsche Bank, what do we call it? Credit Suisse, and we've talked about this on this channel before. Talk about all this need for regulation in crypto. Meanwhile, you have the banking system 0% reserves required in the banking system in the US right now. This fractional reserve is a farce, and they're trying to require, I think it's healthy. It needs to happen. USDC, USDT needs to have a 1-to-1 backing peg. They're requiring more regulatory scrutiny on crypto than they are on the banks, and the banks are failing, whereas crypto is inherently ultimately transparent. It is ridiculous to me, some of the narrative stuff that's going on with traditional finance, whereas Bitcoin, as we're seeing traditional banks fail, and we're seeing, Bitcoin just sort of move to the upside, and I actually shared this about a week ago, but let me see if I can find it really quick. We can see it's right here. I know here we go. Nope, that's not what I want to show. This right here. Look at this. Société Générale, Credit Suisse, Deutsche Bank. Meanwhile, Bitcoin moving up and up. Now, we need to protect ourselves as we're seeing these narrative shifts, because it doesn't mean that it's just going to be all up and, easy going from here, because the narrative is finally shifted and all money is going to be flowing into Bitcoin. There's going to be moves to certain levels, and there's going to be pauses and consolidations at certain levels. And there's going to be a cycle. There's going to be a cycling of liquidity from Bitcoin into other assets. Many of them could be altcoin assets. Many of them can be back out of Bitcoin into traditional finance. We need to be careful in how we map out what we're going to do and how we're going to navigate this market. So coming back to what we were talking about, money coming out of banks. Now let's look at this. We also have other FUD right now with Binance, which led a bit of the move down that we had the other day. Now they're trying to basically say that he's hiding extensive links to China for several years. Well, we've talked about this also on Around the Blockchain last night. You know, should SBF go to jail? I absolutely think he should, but I also think that it shouldn't just be crypto focused. I think they're trying to get news headlines of leaders of centralized organizations within the crypto ecosystem and show how bad they are. Meanwhile, we come back to this graphic here. None of these the executives in these levels are going to have their bonuses clawed back or go to jail because they're part of the old boy network and part of that traditional finance system. So you have to read these headlines and understand that a lot of these headlines are the traditional finance institutions, traditional governments, the people that crypto and blockchain, they perceive as affecting them negatively. It's just because that they haven't learned to adapt yet and integrate these systems, which they can, into TradFi, into governments, into utilize these as another alternative. It doesn't have to fully replace fiat. Fiat's never going to go away, but they're looking at crypto as such, because it is such a great alternative. They're trying to create such a narrative FUD campaign to suppress how much liquidity actually does flow into Bitcoin and other crypto assets. Now, looking at, I actually wanted to go to this in a second. Looking at where we're at right now, you know, as I said, the US isn't the only liquidity provider for markets. We're seeing a huge shift right now in all these dynamic conversations happening with Putin and China and Saudis and how they're going to transact oil. Could it be in the yuan? Are people moving out of the US dollar? Well, all of these things are considerations we have to understand are affecting risk on, risk off behavior, the strength of the dollar, where assets are flowing, where people feel safe putting assets. And we're also seeing that, you know, China, for instance, is they're doing huge liquidity, basically liquidity injections via reverse repo, meaning buying back certain assets. And you can look this up deeper if you want. I don't want to go into this. It's just know that there's a lot of liquidity coming in from China. Also, Japan is printing like crazy right now. They're trying to prop up their economies because they've been so negatively affected by everything going on with the not legacy is the wrong word, the entrenched effects from the global economic shutdown in March of 2020. So we're seeing liquidity coming into markets. So a lot of this liquidity that's fueling this is coming in from liquidity in the East. Now, anybody that wants to be a part of, to stay involved with the I don't even want to call it a revolution, the incredible opportunity that blockchain and Bitcoin provide, needs to basically be a part of this community here at BitLab, be a part of, watch as many different people as you can, do a lot of your own research and see which different projects, Bitcoin, Ethereum, Cardano, AVAX, Atom, the Graph, Gala. There's so many different parts of the crypto ecosystem. There will be some that you're interested in, some that you're not. And I have a whole video I'm going to be doing on this, finding the next 100X. But really what it's about is how do you diversify your portfolio and allocate your capital towards assets that are going to have huge network effects going into the next bull cycles, the next market cycles as well. Which ones are going to have the biggest need for utility? Because make no joke, as we move into a further developed blockchain integrated culture and society, world culture and society, there's going to, essentially, we're building a new infrastructure, this digital infrastructure. So as nation states grow, they have to build new roads, new sewer systems, new telecommunications, and new banking, there's so much that goes into building new economies. And as we move into this blockchain economy, and not just completely disregarding everything going on in the real world, in the physical realm, there's new infrastructure plays. There's new, whether it's Filecoin or Arweave, whether it's Crust, all these different storage plays, whether it's Render or Gala Gaming or Illuvium. There's so many different plays in different sectors of the market. You need to be prepared and figure out what you're passionate about. And also, not only what you're passionate about, what areas are going to have the most need? What areas already are somewhat established? And this is how we can really navigate the space. So looking back at what's going on today, what's going on today? Well, we saw this liquidity coming in. We could see this, and this is largest injections via reverse repo in a month. Look at this massive coming in right now, right at the end of March, as we could see on this graph. We can see this much larger if I pull this up so you can actually see it. But another thing we can see is this is from the rational root, and this is very important. This is on-chain supply distribution. What this means, this is a great chart, and if you're not following him, come over here and follow at the rational root. This is showing all the coins held in circulation and the level, how much. We can see this is a measurement of how much of the supply. At what level were they bought? At what level did they last move? And we can look at this as a better sort of metric. We can see in February to now, let's go ahead and make this larger. February to now, so let's go ahead and reset this. So this is February. You can see February to now, February 2022, I should say, to February 2023, early February 2022, we see a lot of overweighted supply being held at higher levels. And as prices move down, we've had a redistribution. We've had a redistribution of coins coming all the way, basically these people capitulating. And now there's a lot more coins being held at these levels below current price, which is giving strength to the market of where we're at right now. So a lot of stuff going on in the markets right now. Now, is there anything going on? Well, today, 10:57, this is my time. Earlier today, this is Wednesday, March. So let's see if we can refresh this. This is forexfactory.com/calendar. I like to utilize this for a lot of the basically economic data and news that comes out. We can see that today we had pending home sales. So let's see, the forecast and previous, the actual. Okay, so where we're at right now, 10 a.m., the forecast was down 2.9%, and we were actually up 0.8%. So there's this is interesting metric. We also had the FOMC member. Well, I'm going to have to go and see what he said. Did it affect the markets? Well, let's go ahead and look at what's happening on the 1 hour Bitcoin. We do see a little bit of a pullback, but we're also at key level. See this, let's go ahead and mute all this stuff on the chart. We could see this key level right here between these two zones, right at this level, basically the 28,300 up to this high, 28,700. And we are looking like we're getting a little bit of a pullback. Does that mean we're completely going to fall over? Well, let's look at a more broad time frame. So on the 8 hour, we had the perfect blue underbought signal here. We bounced at this level, held this low, pushed up. Now we can see that this is starting to flash red, which is showing that we're starting to get overheated on the 8 hour. Now coming down to the 4 hour, we can see, now this is what I want you to pay attention to. We could see that we had this candle, this green candle right here, that then we have a large momentum candle right here. And then the following candle is much smaller. So what does that indicate to you? If we have a bullish candle, a larger bullish candle, this means momentum is increasing. And then the following candle is much smaller, showing that there's signs of weakness here. There's not as much momentum. There's at least going to be, at minimum, some consolidation at this level, which we're seeing right here. We're seeing this play out, or a potential rejection. Now, what we can look to now is looking here at the relative extrema, this whole area from basically here forward, we can see the relative extrema is sticking out. See this? Sticking out of the momentum cloud. This is showing that the move is a little bit unhealthy to hold at these levels. So we, at minimum, we're going to need some consolidation. If we get other, for instance, a bearish divergence on the hidden volume, if we get something like that, then I'm thinking that there's more signs that we could get a pullback. And I get the hiccups. I drank my coffee too quick this morning. All right, we've got 223 viewers. We only got 134 likes. Let's get that up. Show some engagement with this YouTube. Let YouTube know that you like crypto content. It helps get crypto out to more people. Now we have we're on the 4 hour here. This has got an hour left about an hour left. And what we're seeing here potentially could be something that is setting up for a little bit of a rounding top, for a small pullback. But what we can do is we can always come down to smaller time frame, get some more resolution. As it stands right now, it looks like we're setting up a little bit of a bull flag or a bull pennant, option T. Now, if this continues sideways, for a longer period of time, this no longer becomes a bull flag or a bull pennant. This becomes top heavy because this will end up becoming a longer consolidation than the bull, than the flag. And this essentially, you can measure it from multiple spots. I'm going to measure it from here, option T. This would be, and I'm going to make this brighter so you can actually read it. See it? There we go. So you would measure this. If this were to break out, then to the upside, this would essentially be a target like this. And this comes right up into that $29,000 range, which is basically right in line with where this wick came up to as well. But as we're seeing it right now on the 1 hour, this is looking like all the momentum indicators are looking overheated, but this isn't the end of the world. What we want to look for is if we get a bullish or bearish divergence here on the hidden volume. And if we come here to the market intelligence, we're seeing we had some bearish divergences here and we're getting a cool off period here. So we are sitting on top of this EMA ribbon. So we're looking healthy. Now I'm going to take a moment here because I've been talking for about an hour. I want to just check in with chat, see if there's any questions. I'm going to go into the BitLab mod Discord. If there's been any sort of questions or super chats or anything relevant or exciting that people have asked Alex or Alexander G, you can let me know in here. But all of this, everybody, there's so much pent up and excited sort of move for bullet and like this feeling that we need this bullish action because we had such a bearish, long bearish winter, it felt like. But as we've seen earlier on in the stream, this was all very much in line with where we're at in the 4-year cycle. So as we're getting these bullish push-ups, don't let it negate what your plan is. Remember, you want to have leading indicators. You want to have an indicator multiple indicators that basically agree with that, confluence with those indicators. You want to have a plan, your plan of attack when you're entering. So for instance, right now on this move, looking at this chart, just because we got this push up, are you trying to jump in just because we got this push up and you don't want to miss the move? If your incentive is not wanting to miss the move, then you're trading emotionally, and we want to back away from having emotional trading. We want to have planned and strategic trading. Now on this move, as it stands right now, we can see that we've had this move, option F, we're doing a fib here to the top. We can have a very healthy pullback. This would not be bearish in any sense of the word. If we break down from here and find support at this level, basically the 27,400, we can see the number. If you see how on the right-hand side here, it shows you exactly what the number is as you move your cursor. This is for the newbies. We like to throw the rope back to the newbies as well sometimes. The 27,400, 27,500 region, this region right here, we can even draw a little box here. And we can do that orange. Let's actually do it. Yeah. And make it a little bit brighter. So this would be very healthy because it also would be in line, one, not breaking a new lower low, but also within this sort of all this price action, I would bet that there's a little bit of a volume node in here too. What do I mean by volume node? Let's look at that. The VPVR, which is looking at all these bars, show how much volume, how much interest, how much was traded at the corresponding price level, as you can see to the right. Now, if yours is very blocky, you can double click on the VRVP. If you add that up here in indicators, just type in VRVP. And then when you add it on the chart, if you double click on it, you can come over here to inputs and row size. You can see right here, usually it's like 50 or 75. You'll see this is very blocky. I like mine to have a lot of resolution. So I go like that, and you can see it and makes it not as blocky, and you can see more specifically the price numbers. Now, when we're looking at this right here, let's go ahead and zoom out. So we can see that there is right here. So there's two, golly, there we go. The two areas of interest I'm looking at is right below us, about where this 382 is, fib, is also sitting right about where this point of control, which is this red line coming out of the VPVR. And what we can see here is, what we can see here is we have a high volume node, meaning that there's been a lot of price interest at these levels. This is, see how we have this increase in volume right here? So we have a bit of a shelf here. This would be, if we pull back and bounce here, this is very bullish, okay? If we bounce here and find support at this level and come back up, this is on the more bullish side. It's still bullish. If we fall down here, we see this the volume starts to sink in right here, meaning how much volume was traded at these various price levels. Now, the next volume node right here, as we see this kind of peaks back out, is right in line with where this golden pocket is. The golden pocket is the 0.618, the 0.65 on your Fibonacci. And that's just doing option. You can actually come over here for, if you don't want to use quick keys, on the left toolbar over here, you come 1, 2, third one down, and you see this little arrow. You can either put a star here next to fib retracement, or just select here and come to fib retracement. And then you can go from the low move to the high of the move, and that gives you where the different Fibonacci points of interest are. Now we can see if this moves all the way down to here, this does break this volume node here, but this does come down to another point of interest. Where it will get more interesting for the bears, for the bearish side of the narrative, is if this breaks down here, loses this level, and cannot hold this $26,600 level. Then I start to get a little bit more on the bearish narrative, not even bearish, but looking on a smaller time frame for maybe a further pullback to a target below. And we're still setting up very bullishly with everything that's going on. We could use some sideways consolidation through here, even trading between this range of 29,000 all the way down to 26,000, and trade in this for a month or two. I mean, looking back at this chart, look at this. Look at how sideways this was for months, even trading 20 to 30% up and down. You cannot be shaken out of this market if you understand and have patience. And you need to understand what your time horizon is. Now, coming back, I want to shout out real quick. It looks like we got a super chat from Matt Lane. Shout out, Mr. Matt Lane. Kelly, thank you for all your effort to teach us and the community. You're creating a BitLab. You're creating a great BitLab crew is amazing. Thank you so much, Matt Lane. I appreciate it. Thank you for the super chat as well. I appreciate it. It takes a lot of people and a lot of effort and energy to do these streams. It's not just me. We got a whole Hit Network team with graphics, and there's so much that goes into all this. And again, I want to do also shout out. We've got the BitLab Academy. We do these daily live streams, yes, but we have full academy that has everything from Bitcoin 101, trading fundamentals, psychology of trading, individual candles, candle patterns, courses on psychology of trading, trading strategies. There's so much going on in here. And as I just alluded to, this is the old page. Everybody that gets in now is going to be able to get in at the lower pricing that currently is with BitLab Academy. But I'm getting, I don't know why okay. Everybody that gets in now will be able to keep the lower pricing for the life of their account. We are about to roll it over to the new website. It's coming very soon. It's, as you can see, it's basically there. We have a lot of stuff that's going on in the background with all the integration of all the courses and the FAQ and the support. We want to make sure we don't have any issues with them rolling over all the members. If you are a member, you won't need to do anything. All of a sudden, one day you'll just see at the BitLab Academy site, we will send out notifications, but you'll see the new website, you'll see the new courses, all the new quizzes, the new resources. So much is coming. I cannot wait. So shout out again to Matt Lane for your message over to us. Now, coming back to the charts, we got let's go ahead and break down some of the other things we're seeing, some of the some of the other coins and projects that are in the space, because there's been some things that have been moving. So shout out if you're in the ADA, if you've been in ADA, shout out ADA, hashtag ADA in the chat. If you're an XRP person, put a hashtag XRP. If you are, let me know which coin other than Bitcoin is your favorite altcoin. I also saw you guys did a lot of call outs earlier for some coins. So we're going to break down some coins here and see what is going on in these markets. So let's go ahead and look at Cardano. Cardano broke out of it's in a channel. I want you all to notice this. Let's go ahead and minimize this. We've got this channel here. It's minimize the bottom indicators as well. We've got this channel that it's basically been oscillating between, and we can see this is not a small channel. This is about a 10% channel that we can move. And when you move at an angle, this is going up. I mean, this was a 21% move. And then this breakdown was a 12% breakdown. Now we're already back again. Let's come here. We're up 15% from where it bounced off of this trend line. And we can see between these two trend lines, we just sort of projected where a likely move would be. We could also go from here, option T. We saw this zone right here. We can move this down just a little bit. So this gave us an idea, a roadmap. This is why technical analysis is so important. It's not always going to play out, but it gives you likely areas of interest of where price action might have an interaction, might reverse, might have people taking profits or selling, or all these things are relevant. And we can see similarly, this was coming down into this level within a falling wedge. You see this right here? This falling wedge, this is a wedge. It's angled to the downside. And once we broke out of here, this gave us a clear indication of move to the upside. So this not only broke out, this broke out, faked out, and then really broke out. So what are we looking at here? Let's go ahead and delete this Fibonacci. Let's go from the bottom of this move, option F, to the top. We could see that we could fall. We could fall from here all the way down. And there's a volume node right here too. Look, right in this region, the golden pocket would be about 35 cents. This is if things go bearishly in the market. This is if there's either some terrible story that comes out about Cardano, which I think is unlikely currently. They've been building so methodically. But if the markets tumble, altcoins tend to tumble with a larger percentage drop than Bitcoin does. So you have to be careful with this. Now, looking at this, one of the things we forgot to look at is this right here. And this is actually very bullish, but it hasn't happened yet. And that is this right here. Looking at the total market cap for altcoins, look at this inverted head and shoulders, and look at where we're at right now. This is this sort of key level, this key resistance, not only this major downtrend resistance right here, which we are butting up against right here, but as soon as we break out of this, it may not be fully all systems go yet for altcoins I'm talking about. We still have this major region right here that we've got to get through. And once we break through this, we've got some big moves that are going to be coming to the altcoin markets if you're in position. And you want to get into position to stuff when the positions set themselves up. So getting back over here to Cardano, we could see that this was coming down, coming into a level of support. And we also could prepare, maybe you don't buy at this level of support. You can wait for coming up to this trend line resistance. And you can see that as it breaks out and you get the retest, then your entry could have been essentially, you get this move, right? Breakout. Come down, retest, and then you come back up. This is that level. Now, coming back over to my page, I have shared, where is it at? I have shared this many moons ago, and it's this chart right here. Get familiar with it. This is what you want to do. You want to have something break out, have the bears attempt to let some bulls take profit, have it come back down and flip a previous level of resistance to support. And if you're very aggressive, which if you're experienced, fine. But if you're not experienced, there's no need to be very aggressive. Let this pullback happen, and you don't need to buy a second this retest happens. Let this break past this previous high. So what this looks like on Cardano is, zooming in here, is we see this. This is a previous high. I want to delete. We see this breakout coming down, testing this level, and these lines are always going to be regional. They're not going to be an exact level. So when this broke out, when this came down, when this is trying to re-break out again, the level that we're watching here is this level right here. And you can see price action came up and paused at this level. And then a battle between the bulls and the bears. This is that doji candle right here. What's a doji candle? It's that basically very small body and a basically mostly wick. So this is an equal battle between the bulls and the bears. And so as soon as the price action starts moving up on this, basically this area would have been your entry, basically to confirm that the bulls are taking control. So that's how you can take advantage of these moves. And you can do it with all the different altcoins. And now if you miss that move, that's okay. Moves always show up and set up with new setups all the time. So you don't need to jump into something because it's in the middle of the move, because then you jump in here because how much it's moving and then it comes down like this. That's not what you want to do. You're trading with the plan. You're trading with strategy. Now let's look. I'm thinking, again, we still have this larger channel that we're in. A small pullback here, maybe down to this volume node here, 37 cents, 37.2. As we can see right here, that's if we have further downside. This is also in line with his previous lows, previous high also right here, option J. So we can see that if we get down to this level, potentially, and we bounce here, then we're coming up to likely test the top of this range here. So that's what we're seeing with Cardano. Now option go, let's look at ETH USD. This is a big boy. I should have done this first. This is a big boy for altcoins. This is the largest market cap of all altcoins. You have Bitcoin being the largest market cap of all coins within the crypto ecosystem. And then you have Ethereum being the largest market cap of all altcoins. And then, and you know that. Why do you know that? Crypto, CoinGecko.com. You can see, come here. You can do it, baby. So you see, this is an order of market cap. These are the market caps. This is the total number of supply and circulation multiplied times the current value of that asset. That's how you get the market cap. This is how much liquidity is in that asset. And so Ethereum is the largest coin other than Bitcoin. So let's look at what it's doing, because this could also be a bellwether for what's happening within the altcoin market. So now we're seeing here, let's sort of zoom out here. Let's zoom out, see what's going on. Okay, we got a little bit of a sideways, I don't really particularly like these, but a sideways inverted head and shoulders here. If we could come back up in here, I like these best when they're flat, but these still do play out within the crypto ecosystem. But if this price comes back up into this level, this 1875, if we break this zone right here, then we're looking at a target from this inverted head and shoulders up at $2,400. But I don't think because of that target, that's where we're going. I think if we come back out here, go on the 4-hour time frame, I think the next stop realistically for Ethereum, we talked about this the other day on the stream too, is having the price break this level and having this region right here, this basically, I would say 1950 to 20,050, 1,950 up to about 2030, 2050. This zone right in here. Once we break this zone, then we can talk about moving up to the next sort of staircase. Because just like anything, just like any asset, as we move, it doesn't just go like this. It goes like this, breaks, goes like this, breaks, maybe has some consolidation, and then breaks to the upside or gets rejected down. And we use all of our ingredients of momentum signals, strength indexes, what's going on with the grander ecosystem, traditional markets, as well as within the crypto market. And through that, we can make our informed decision based on what is likely to happen. Now, as this stands right now, let's look at our traditional indicators. We're seeing, okay, on the 4-hour, we're seeing that, look at this. So RSI, option T, RSI is broken out of this downtrend coming up. Now, if we zoom in specifically on RSI, I don't want to do that. There we go. Specifically on RSI, we also have our 50 line we can create right there. Option H gives you a horizontal line. We've broken not only out of this downtrend downtrend resistance on strength. RSI has broken through that. We have the moving average on RSI moving to the upside. Even the moving average is just now about to pass the 50 line. It might already have passed it. Looks like it has just broken barely above it. But if we have any sort of pullback on Ethereum, we want to see, if we are in the case of the bulls, we want to see this RSI, especially if we're on the daily. We want to see the RSI, once it gets up above the 50 line, stay above the 50 line. Now let's actually look at this on the daily. Now, okay, we're above the 50 line. We have a similar trend line that we had on, this is on Ethereum, similar trend line there that we are also breaking it out above. We are above the 50 line, inherently bullish in general on Ethereum right now. We have this inverse head and shoulders. We want to see this continuation to the upside. The stochastics have pulled back a bit, which is good because this means that now that rubber band, there's room to run to the upside. Now we can see with the MACD, this did contract, but if we zoom in on this, we could see this did contract, but this bounced at this zero line, and we're getting an expansion again. This is what these histogram bars are doing. They're measuring the distance between these two, the MACD and the trigger line, the signal line. And so when you see these expanding, that means these two lines are expanding. The momentum is increasing. When you see them contracting, that means the momentum is contracting. And so we're seeing this, all signs on these traditional symbols showing that there's a bullish narrative happening right now with Ethereum, and we want to see what happens when we get to this neckline here, which is right about 1863, 1875 in this region here. Now, looking at the BitLab trading stack, look at this. So on the daily, look at these relative extrema bars sticking to the downside. This is showing that same thing we saw in Bitcoin, that there was a lot of pressure that was building up there with, even this small movement to the upside and downside. There's not enough movement based on the strength that was coming in for how these candles were playing out. And then we see this big move to the upside. Now, we are seeing some bearish divergences. Let's go on a little more conservative. There we go. Nope. There we go. Okay. So we're seeing this is on the more conservative setup of my the BitLab trading stack. We're seeing money flow come up, checking money flows coming up. We saw all of these to the downside, giving that pressure to the upside. Now coming on the 4 hour, we can see that we had this blue, look at this blue wave on significant movement. We had the relative extrema sticking out slightly, and we're seeing volume come up before the price action was coming up. Which is excellent. All the things we wanted to see on this. And we also had a relative extrema bullish divergence here, which gave that identification for a likely move to the upside. Now here, we're seeing a lot of battle from the bears. And I think this is because, in terms of volume, because we're seeing, look at all these bearish divergences on hidden volume on Ethereum. And this, I think, is because we're coming up to a level that has a lot of resistance. So it makes sense that people are essentially taking profits at these levels. So what we're wanting to do is we want to see the significant movement flip back to blue, showing that they're undervalued, oversold. And we'd like to see, as this right here on this 1 hour, we're seeing this develop right now with the relative extrema sticking to the downside, showing that there's some bullish narrative coming in, likely move to the upside. Now, we got, let's do I see a couple more. If we do see a move to the downside, option F. Now, I would like for it to keep a bullish momentum, 1780 area, but it's still very bullish if the price action comes back and bounces at this golden pocket of 1750, this region right here. Now we've done that. Let's go to, let's see, Alex messaged me GRT. So let's look at GRT. Strong move here. We can see, I can just see chart vision. We had a trend line essentially right here. Trend line right here, broke out of this. We had this capitulation, accumulation sort of to the side. Now let's go to the daily. I want to see what this looks like. Auto. This is the graph. Now on the larger time frames, I have these two sort of trend lines set. based on this peak and these peaks, because these peaks gave a lot of sort of resistance, which is why I projected these out, and we see a lot of resistance, rejection. And then we also have this trend line where we have rejection here, rejection, a little bit of a fake out, rejection, and then a rejection here. So we're trading sort of in this channel on the daily. Now looking at the smaller time frame, we can also see, look at this relative extrema. Look at how far out this was showing. A lot of bullish strength was coming in while the price action was not agreeing. And then this whole move down. Look at this right here. And then we get that boom breakout of this smaller time frame. Basically, this is still on the daily. It was also established, but this breakout. But coming down to the 4 hour, we can also see we had the blue finally come in. So we had each time we've had the blue come in, we had to move up. And we had a blue come in, we had to move up, and we had all that built up pressure, that bullish pressure that gave us that rocket to the upside. Now, we're coming up at resistance level where there's, look at this, high volume nodes. So there's been a lot of price interaction here. And as we're seeing GRT moving into this area, some people are taking some profits. It could just be a bull flag, in which case, if it is a bull flag, we could project another movement to the upside, which would be in line basically with where, look at this, option J, where this previous price action top would be. So that could make sense if we can see a continuation in bullish movement on GRT. Now, if we get a pullback, we very well could get a pullback and have price action come back down. Come on, you can do it. Price action, come back down and test this level and then rocket up to the upside, or maybe just a smaller pullback, because we do have basically a price interaction level, sort of option T right here. So if price pulls back to just to this zone, which also looks like it may be around where the golden pocket is, it's just that's actually around where the 382 level is. So things are looking bullish, things are setting up, but we want to watch the news of what's happening with all the different narratives that are coming in, because any of these narratives can cause a sell-off that scares you, that you see that big wick down and then immediately reverse back to the upside. So I want you all to proceed with caution on all your moves. Have your risk management in place, or have a longer term time horizon, and don't be shaken out by these moves in the market. Now we're going to look at, my light went off again. I don't know why that. USB light after about an hour. So we're going to look at a Matic, because we have not looked at Matic recently. Matic is, you know, for people that don't know, Matic has so many partnerships, from Disney to Nike to, and they're just rolling out the ZK EVM, ZK rollup, basically a scaling solution to make things a lot faster for things that are on the Ethereum network, especially on Polygon. Polygon is Matic. So we're seeing Matic has performed exceptionally well as compared to a lot of other coins over the last few months. But we're seeing, I can see just immediately, we have this channel, option T. We've got this sort of channel here. It also could be a rising wedge. It depends on. This is why TA is an art form. This is looking a bit more like a rising wedge. However, if the markets are as a whole pushing very bullishly, say the XRP case gets closed, say there's just a ton of liquidity, quantitative easing is announced, then any of these structures, although this is an inherently bearish structure, this likely could come down. If the market as a whole gets a giant bullish jolt, then this may only fake out to the downside and then go to the upside. It may just come here and then go to the upside. But what I'm seeing where we're at right now with the bullish movements in the space, I'm seeing that the price action is finding support on where this level is right now. We can kind of come here, option F, from this move to this level. Look at this. So from this move down of this range that we're in, the price action pushed up, and now we're kind of fighting between this support level right here and this golden pocket, which is basically directly above us. If we're able to break back through this and come up, then I would expect to see Polygon Matic basically make a move. If we're able to get above this, make a move up to this level, which is another 40% up up here to the top of this range, which is $1.82. So if we lose this level, though, you've got to know, if we lose this level, option F from this low here to that, we're sitting on this level from this move up, the pullback to this golden pocket here. So this level is not only the support right here, it's also the golden pocket of this range move. And so if we lose this level, maybe people are taking some profits on Polygon. And I would like, I would not want it to lose. I would not want it to lose this 75-cent range, but I think something more likely would be pulling back into this sort of range, option J, right here, right around the dollar level. But that's what I'm seeing. That's what I'm feeling. Let me know what you're thinking about. Let me know your levels on all the altcoins we did today. Let me know where you think the prices are going. Give me some targets. I want to see what you guys have learned. Maybe I'm completely wrong. Maybe I could take a note from you all. Are you bullish? Are you bearish? Is this a bull trap? It's looking like the market is setting up. It's making attempts to break these levels, but sideways consolidation is not out of the cards right now. So I just want to say, everybody, proceed with caution. Let the setups and the developments identify themselves. Let them set up over time and get in position because they've developed, not because you're trying to just grab a hold of a lightning bolt as a candle's moving up, or grab a hold of a short in the middle of a red candle. Be prepared. That's all I got to say. I hope you all have a wonderful day. Yeah, I hope you all have a wonderful day. Hit the like button, hit that subscribe button, ding the bell, get involved with our community. I want to see this community growing, and I want to see you all engaged in the comments. Drop in comments below. Let other people know about the stream. And again, remember, go over to the BitLab Academy page, which is at Academy BitLab, and make sure that you are retweeting these each day, because on Friday, I will pick a random day. And those of you that retweeted, there will be a random drawing of all those you that retweet these. And there's going to be some great prizes that are going out, some gifts for access to the courses as well as the indicators. So hope you all have a wonderful day. And with that, I will talk to you soon. Over and out. Adios, muchachas. Thank you for coming. Thank you for being here again. Adios, muchachas. Thank you for coming. Hit that like button, subscribe, and be my friend.